The history of banking, the history of finance, and commerce are closely related to it. The earliest form of banking as we know it took place in Egypt and Mesopotamia around the 18th-20th centuries BC. From the days of the early Babylonian, Assyrian, and Greek merchants who hoarded their gold and who needed to borrow or exchange money, banking had already begun. The primary interest of these traders was to protect their gold and money from theft. Thus the banking of those times took place inside the temple, which were considered safe and sacred. These ancient forms of lending, especially in Mesopotamia and Persia, involved physical goods such as grain in addition to gold. There is also archaeological evidence that a type of lending activity took place in ancient China and India. Banking in the modern sense of the word can be traced to medieval and early Renaissance Italy in prosperous northern cities such as Florence, Venice, and Genoa. The Bardi and Pirozzi families dominated banking in 14th century. Florence, setting up branches in many other parts of Europe, perhaps the most famous Italian bank was the Medici Bank, founded in 1397 by Giovanni Medici. The oldest bank still in existence is the Monte dei Paschi di Siena, headquartered in Siena, Italy, which has been operating continuously since 1472. Financial transactions were usually conducted by government agencies, private entrepreneurs, or temples. From 600 BC, Greek moneylenders began to develop book financial transactions with this method. They could help the merchant of the time to avoid transferring largest amount of currency, thus making their travel and transportation easier and safer. This can happen by receiving payment in one Greek city and receiving credit in another. Asia Minor, which was inhabited by Greek of Mycenaean and Achaean origin and later by Ionian Greek, played an important role in the early stage of banking. After the fall of the Roman Empire, banking activities declined as with the rise of Christianity. Interest charges were considered unethical and the banking profession faced restrictions. To facilitate trade, lending and depositing money and goods from Western Europe to Jerusalem, the Templar invented the letter of credit, which allowed merchants to travel without risk to robbery or transport large amounts of metal coins. At the same time, on the other side of Europe, the Byzantine Empire developed a sophisticated monetized economy with advanced banking practices. Byzantine bank would give entrepreneurs and businessmen entitled capital to start their businesses, to bring private wealthy citizens together with other businessmen to lend them money from a joint venture. Also during that period and mainly in Western Europe, banking was also in the hand of Jews who would also be very important to wealthy families and kings of the time. Of particular importance was the Jews were generally prohibited from owned land and from certain professions. Moreover, they were not subject to the order of the church, so they would become very good in the profession of merchant and bankers. In the 13th century, northern Italian bankers, commonly known as Lombards, increasingly supplanted Jews and lenders to men of power and wealth. Italian bankers' efficiency increased with their accounting invention of double entry bookkeeping, which would help them avoid the sin of interest. In the late 13th and early 14th centuries, prominent Italian banking families, and thanks to their powerful gold coin, The Florin managed to make Florence the banking center of the time and could open and operate branches beyond its borders, from Jerusalem and Constantinople to London and Barcelona. They were so well established that they could finance the king and the war and at the same time avoid post-war bankruptcy and default on their debts. After the well-known families of 14th century Florence, the Piruzzi and Bardi, the Actuali and the Mozzi, a new banking house, political dynasty and royal house arose. The Medici. The Medici Bank was one of the wealthiest and most respected institutions in Europe. However, the shift of European power to the Habsburg in the late 15th century was the main reason why another banking family of the Fager dynasty, a German-owned, became the leading bankers in the 15th and 16th centuries. Greeks and Jews were the leading bankers and financiers during the Ottoman Empire, formerly the Byzantine Empire. From the 16th century and especially in 1587, the Venetian government established the Bank of Venice as the Banco del Piazza del Rialto. The Venetian practice of banking on the security of public debt was so important that it has survived into the modern era. The purpose of the Bank of Venice was to perform the important function of holding merchants' funds on safe deposit, thus enabling financial transactions in Venice and the rest of Europe without physically moving money. A related development was the check, an original method of transferring money without the use of currency. The evolution continued in Venice and banking became more sophisticated with the establishment of the Banco del Giro in 1670, which became heavily involved in state finance and now allowed Venice to raise public finance on the basis of guaranteed loan. This concept of banking would evolve into the national bank, which developed as a central bank in England in the 18th century. The earliest form of banking. Wealth was usually stored in temples, treasuries, treasure houses, and treasuries. The earliest banks were used only by rulers to finance more important and larger festivals and construction. Archaeological evidence. Early excavation dating to the period beginning around 8000 BC and ending around 1500 BC have recorded objects called clay token, thought to have been made to record counts of agricultural produce. Beginning in the late 4th millennium, mementos were used by members of temples and places to record stockpiles of goods. Record type for trade exchange of payments were first created around 3200. Very early writing on a clay tablet called the Code of Hammurabi, which refers to the regulation of various banking activities during the civilization. The development of banking spread from northern Italy throughout the Holy Roman Empire and into northern Europe in the 15th and 16th centuries. This was followed by several important innovations in Amsterdam during the Dutch Republic in the 17th century and in London in the 18th century. In the 20th century, development in telecommunication and computing caused major changes in bank operation and allowed banks to grow dramatically in size and geographic spread. The 2007-2008 financial crisis led to many bank failures, including some of the world's largest, and fueled much debate about bank regulation. During the 17th and 18th centuries, banking began to take its modern form as new banking practices, such as discounted rated loan and promissory notes, predecessors of banknotes, took place. These practices combined with traditional practice of deposit taking, money changing, and lending supported industrial as well as commercial growth. Notable for this development was the London Gold Myth, the creation of mutual saving bank and postal saving system was also responsible for the development of banking practices. Due to the industrial revolution and was of the time, banking became very important as the demand of funds was also great. London and Amsterdam were the centers of these financial activities. During that period, an important role was also played by the Rothschild dynasty, which was able to manage very large financial and banking activities, ranging from the central bank and government financing to other large-scale investment. In the late 19th to early 20th century, banking was intertwined with the economies and societies of Europe and the United States and was influenced by the geopolitical and macroeconomic events taking place. Events such as the Great Depression, globalization, and the deregulation of global banking have changed the banking landscape over the past 120 years, with the development of a variety of new financial intermediaries. The technological evolution of banking, especially throughout internet banking, has offered great benefits to businesses and the public such as global retail, commercial, merchant and investment banking services. However, the financial crisis of 2007 and 2008 showed us that the entire global banking system could collapse completely due to the lack of creative aspects of financial engineering, bank accounting and financial regulation that should properly reflect the needs of the 21st century.